Let's get right into it. I wanted to start by talking about the Responsible Financial Innovation Act, which you two reintroduced this session. What can you tell me about the differences from the original bill?
It's my voice.
Oh, I'll go first. Yeah. I'll do the long answer.
It should be set.
Okay. So our effort over the last year in refining the bill was really to address some of the challenges with FTX, to make sure that we had more robust provisions for consumer safety, consumer protection. We also wanted to address DeFi more directly. We also wanted to put more meat on the bones for stablecoin. So we just continue to improve the bill and to add more detail, add more thoughtful analysis about defining digital assets, looking at the characteristics, defining a digital security, defining a digital commodity, and then creating a process for a digital asset that might well be blended and not one or the other. And so we're very proud of this version of the bill, and we've solicited more advice and guidance from all stakeholders. We're still open to more improvement to the bill, but we thought this would be a great place for the committees to start at least having hearings and talking about what common sense regulation and what a regulatory framework would look like for the industry overall.
How are those discussions going? I'm curious specifically about Banking Chair Senator Brown.
Well, I'll let Cynthia talk about the banking committee because she's on the banking committee. But we together have done a lot of meetings. We've reached out to Treasury, we've reached out to the Fed, we've reached out to the SEC and the CFTC. We've taken meetings with all of those stakeholders, and then we've continued our conversations with our colleagues to get their thoughts and ideas, but also to brief them, to get them to look at the bill, to co-sponsor. We've asked the chairman to all have hearings, and those meetings have all been very productive.
Yeah, banking has been a tough nut to crack. It is a committee that advances very little legislation and has been reticent in the area of financial assets that are digitally based. So I'm actually pleased that Treasury's finally willing to engage with us in a more constructive way. In the past, they've also been kind of a closed door. We've asked for comments on our bill, and they've been hard to get. But now they're starting to come forward a little bit and be a little more responsive. So, you know, just like playing tennis by yourself, if nobody will hit the ball back to you, it's hard to know how to make things better. And until now, we've been playing doubles on the same side of the net with nobody to hit the ball back, but finally, that's changing. And so just starting to have a dialogue with Treasury and some of our colleagues that are starting to get more well-informed on this subject is really helpful.
I want to talk more about Treasury in a minute, but what can you share about those conversations with this bill specifically?
Well, I understand that Wally Adeyemo was here last night. He seems to be the most well-informed of the people I've talked to at Treasury, and he seems to be the guy who's kind of taking the lead on a lot of Treasury's interactions with senators. So our bill, up until now, has had, on the issue of mixers and tumblers, for example, asked Treasury or instructed Treasury to do a study of mixers and tumblers. They now may be ready to engage with us on some more specific statutory language with regard to mixers and tumblers. Our bill allows up to $150 million to FinCEN to beef up their ability to address illicit finance or financial crimes committed in digital assets. And they're also beginning, I believe, to recognize at Treasury that there's kind of a line between what companies like Chainalysis can do for the government, which is substantial, by the way. They've been really sort of the early private sector godsend to this industry. There are areas that creep into national security, where Treasury would like to have some of their own staff to keep it a little more in-house, and certainly Senator Gillibrand and I will be receptive to those conversations. Senator Gillibrand is on Intel, and she's on Ag. So the good thing about, serendipitously about our committee assignments, she's on Ag, that's where Commodity Futures Trading Commission is. I'm on Banking, SEC. She's on Intel, where the illicit finance stuff is a huge concern. And so we can kind of monitor and hopefully continue to educate our colleagues, as well as engage now that the doubles team on one side of the net has somebody to hit the ball back to us.
And we actually had very thoughtful communications with other senators who are interested in the crypto space, and we were able to put a bipartisan amendment into the defense bill, which is still in the defense bill. I don't know if it'll last through conference and whether it'll be in the final bill, but we're hopeful it is. And it addresses mixers and tumblers, it addresses illicit financing and terrorism financing, and requires a regulatory not only a study, but also recommendations. So, and that was common ground for all the people interested in crypto. Exactly,
and both of us were moving closely, I thought, to advancing a stablecoin only provision by working with Congressman McHenry in House Financial Services and Congresswoman Maxine Waters. So we were starting to really hone in on that part of it. I thought we would see something before the end of the year, but of course, Representative McHenry got distracted by being the Speaker Pro Tem, had to take his eye off the ball of this. That, I think, set us back a little bit in terms of our wrapping something up on stablecoin before the end of the year. But I still think that that's an area that could come early in 2024. What do you think?
Yeah, I definitely agree. I sat down with Ranking Member Waters just a couple weeks ago and was able to really talk through how far the bill had gotten on a bipartisan basis, the parts of the bill she was really pleased with, the areas that she wanted to work a little longer on. We offered some work that we had done based on how far they had gotten in the House. And so we've offered I think a very substantial stablecoin bill for the House to look at how we resolve the decisions about DFAST, for example. If you want to have issuance from a state regulatory body like the Department of Financial Services in New York, what is required? What oversight does the Fed have of that? And that has to be a very specific determination that makes the Fed happy, as well as an organization like DFAST happy, so that they can keep participating and create the oversight and accountability and market structure that actually can work. So we feel we got to a very good place. The House will still have to do their own work, but I at least had the benefit of getting to hear from Ranking Member Waters about what her biggest concerns were, what her goals were, and I felt like we got to a very positive ending of that first meeting.
No, it's definitely reassuring. Stablecoin legislation has been a very long time coming. Last night, Representative McHenry spoke, and he made some interesting comments about states and their progress toward crypto regulation. You mentioned the New York Department of Financial Services. How do you think about state regulation specifically with stablecoins? Do you think that states might be moving faster than the federal government?
Oh, I'm sure the states will try to regulate themselves because that's what they do. But our decision point is when a state wants to issue a stablecoin, what structure do they have to have around it to make sure they have consumer safety, cybersecurity, safety and soundness? We know we have it in our states. There may be other states that have never done this before. We want to make sure that if they do set up a DFAST type of organization, that they do it well, because we want to protect consumers. That's the Fed's biggest concern. Everyone is happy with issuance by banks, both state and federal banks. Absolutely happy with that. That's definite common ground. The question is other state regulatory agencies and how robust do they need to be to have this authority. And I think Cynthia and I have worked in a very positive way towards what that should look like.
And we very much in our bill protected the dual banking system with regard to the issuance of stablecoin. That was a big priority. New York has strong regulatory frameworks in this area, so does Wyoming. And so we want to make sure the dual banking system is protected in this regard.
Yeah, Wyoming is definitely a forefront state in terms of crypto regulation. It's been fun to watch that. I wanted to get back to the Treasury. So we saw this proposal introduced to Congress on Tuesday, asking for significant oversight and more power. How are you thinking about that?
We just got the draft. We're just beginning to plow through it. I'm going to be looking specifically about what they recommend with regard to mixers and tumblers to see if that's an area where we can sit down with Treasury and instead of having a study of mixers and tumblers at Treasury, just go ahead and do it and implement their recommendations next year. But we haven't even had a chance to go through that part of it. I'm also interested in seeing if they have any recommendations with regard to, for example, changing the definition of broker, if there's anything associated with the IRS, if their draft has something to do with what ours does, which is proposing that the wash sale rule changes be used to help fund the regulation of digital assets at the SEC and the CFTC, because we know we're going to have to beef up staffing because this is such a robust industry now, and especially if we begin to see Bitcoin EFTs be presented to the SEC in 2024, they need to have the staffing available to evaluate it. You know, we're behind now a little bit internationally in establishing and clarifying our regulatory framework, and other countries are encouraging Senator Gillibrand and I, as is the EU, to get this show on the road in the United States. They want to know what our regulatory framework is going to look like. So time is of the essence here.
I like that you brought up the SEC. There's always a lot of discussion around that particular agency at a crypto conference. This whole notion of the era of regulation by enforcement, is that something you agree? Do you agree that that's what's happening? Why is it dangerous? Why do, having some of these battles play out in court, how does that slow down the process?
Well, I think it creates enormous uncertainty for businesses. And so when they don't have certainty on what the regulatory rules are going to be, they go offshore. They go to different areas of the globe where they have better certainty or better regulatory frameworks. We'll lose a huge amount of our industry if we don't regulate here and don't do the work here. I think we've seen that when the SEC has overreached, the courts have disagreed with the SEC. We've also seen disagreements from GAO, and I think that's showing that you really should not be regulating through enforcement. You should be going through regular order, and it also puts a spotlight on Congress that we should also do our job and pass common sense regulation now so that enforcement agencies can just do their job, which is implement the laws that we've passed.
And when you look at something like Bulletin 121, which the GAO just recently should have gone through the formal rulemaking process instead of just be implemented as a regulatory bulletin, it helps us bolster our argument that this is a statutory matter. This is a matter for Congress. And so any agency that says, oh, we have adequate regulation is getting second-guessed even by people who have an opportunity to vet what the executive branch is doing and has done. Regulation by enforcement action is not the way to go. How do you know what the rules of the road are? There are companies that we know, like Coinbase, who have gone to the SEC and said, well, tell us what to do and we'll follow what you tell us to do. And they haven't gotten adequate guidance, but they have gotten slapped with enforcement actions and proposed penalties. So that's no way to run a railroad, and we want to fix that.
It's great to hear. It's certainly a lengthy and expensive process for a lot of these crypto companies as well. Senator Lummis, you mentioned SAB 121. Why is it so important that the Government Accountability Office determine the guidance is in fact a rule?
Well, if you were a customer and you had somebody custodying your assets, and the government said that they have to be on the books of the custodian, so what if the custodian goes belly up? Do you want your asset on their books? Of course you don't. And so I think it inhibits the ability of custodians to provide to their customers a comfort level that it's a safe place to park your digital assets.
Yeah, and it's also just contrary to how the financial services industry works. I mean, banks are absolutely against it because it would be absurd if they were putting on their books everybody's bank account that they're holding. It's just, it's contrary to how financial services works. So I'm glad that the GAO said what they said. I think it's important that they provide clarity since the SEC is not. And again, I think as Cynthia said, it will hopefully inspire Congress to do its job.
Hopefully soon.
Things take a long time. You have to know, like, I just passed a bill that took me 12 years. Like, it takes a long time, and it's big, important things, but you need to build consensus, and you have to get the country to care. Not many people care about cryptocurrency. It's not top of mind for an average American. So most members of Congress aren't hearing anything about it, nor do they want to know about it. So passing laws takes time, but having conferences like this, talking about the issues, explaining your business cases to regulators and to members of Congress is smart, because without it, no one will ever care about your industry and they'll never bother to regulate it, and then it will fail. So just know it takes time. You guys know what you're doing, but the rest of the country doesn't know what you're doing. So.
And to Senator Gillibrand's point, you know, she and I have talked about this till we're blue in the face, including with you. You're probably getting tired of seeing us on forums that come before you. But we've been in kind of a one step forward, one step back situation. Last year it was FTX and a few other colossal and high profile failures. So this year it's been Binance and Tether and the manner in which the illicit finance of
terrorism, financing, yeah. Hamas. And we know the answer to that question, but nobody else does. And so it's very, very hard.
Yeah, so these setbacks challenge our ability to once again, you know, back up the train and have the discussions about what the legitimate use cases are for digital assets. And we thought we'd put those conversations to bed a long time ago. But we have to replow that ground all the time when things like this happen. So it's, you know, it's good in a way that we're seeing some of the bad actions and or bad actors brought to light and addressed because it helps clear the way for legitimate businesses to move forward. But it also sets us back a little bit in helping people understand what the legitimate use cases are. And I have to say, you know, for example, when Senator Gillibrand and I took this on, she had a lot of interest in the subject of NFTs. And I couldn't wrap my head around NFTs, so I was like, okay, you know, you do what you want in our bill with NFTs, because I just don't get it. So now I've been reading this book called Web3, and it's opened my eyes to the potential use of NFTs, you know, as sort of a container or vessel to protect private property rights. And all of a sudden, I'm having my, oh, I should have had a V8 moment, like, holy cow, NFTs are going to be big.
In everything.
Yeah, and
You heard it here first.
What's that?
Said you heard it
Here first.
Yeah. So so then I look back at, oh my gosh, now I have a lot to learn, and I'm looking at all these innovations that Web3 bring about, and I think, oh my gosh, we're so far ahead of some of our colleagues, but the industry is so far ahead of us that sometimes I think, wow, by the time we get this implemented, you know, will it be a dinosaur, or will it be nimble enough that you all can use it? So what I'd ask is take some time during the early parts of 2024 to fan through our bill again and think about it in the context of some of the innovations that you are implementing that are going to be game changers that maybe we hadn't thought about in our bill, and please give us feedback.
Well said. Thank you.
No, thank you all so much for joining us. Really appreciate your time. I know you have very packed schedules.
Thank you. Thank you very much.
Thank you.